I will say when a spot Bitcoin ETF is approved, because I think the probability is, well, we think it's 95% now, if not higher. And if you look at the performance of Bitcoin over rolling 3, 5, 7-year periods, it is the top performing asset. And overall those periods, since its inception, it's the top performing asset out there. So institutions cannot dismiss it. You could have a bit of a sell-off, but we think that the institutional demand is going to take this new asset class much higher in terms of market.
ARK Invest founder and chief executive officer Cathie Wood is more than 95% certain that we are getting a Bitcoin exchange-traded fund in 2024. Cathie's investment management firm has partnered with 21 Shares, a popular financial technology company, to offer a suite of innovative crypto-based ETFs, starting with spot Bitcoin and Ethereum ETFs, which are both pending the approval of the U.S. Securities and Exchange Commission. As a result of her work with all categories of institutional investors, Cathie has expressed extremely bullish sentiments about how the approval of a spot Bitcoin ETF will completely change the entire cryptocurrency landscape. According to Cathie, the approval is practically a done deal with an over 95% chance it will come in by January 10, 2024. In a recent interview with Bankless, Cathie also discusses the possibility of institutional investors coming aboard in droves after the approval is announced. According to the ARK Invest CEO, these investors might start by investing only a few basis points of their portfolios in Bitcoin, but as certain conditions are met, they will gradually increase their allocations. At the moment, about $30 trillion in advised wealth cannot be pumped directly into crypto assets like Bitcoin. 5% of that gives us about $1.5 trillion, which Cathie believes would be pumped into Bitcoin and the overall digital assets in the years following the SEC's green light. This is why people at the forefront, like Cathie, are so extremely bullish about what's coming for crypto within the next few years. According to the ARK Invest CEO and 21 Shares co-founder Ophelia Snyder, this will be way bigger than most people can ever imagine. It'll be a completely revolutionary moment for Bitcoin, leading us into the next era of cryptocurrency adoption. As we bring you clips from Cathie's latest interview with Bankless, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks, and enjoy. To begin the discussion, Cathie discusses her partnership with 21 Shares and how they are combining ARK's extensive research and investment capabilities and 21 Shares' market knowledge and operational efficiency to deliver a targeted portfolio of digital assets that will revolutionize the entire industry.
Partnership started we didn't know it at the time, but in 2018 when I first met Ophelia at an ETF confab happened to be Rome, Italy. And we sat next to each other serendipitously and started talking. And I realized that Ophelia and Hanny, her co-founder, had within 1 year, because they started, I guess it was 2019, it was 1 year, they had created a platform that everyone will need to create if they want to launch a spot Bitcoin and other kinds of crypto ETFs and ETPs. So their infrastructure was in place. They had great research, especially on the research side of the firm. But I was thinking about how passionate Ophelia was about plumbing and wires and all the things that go into creating an infrastructure to make things happen. And I said, I must introduce her to Tom, our COO at the time, now president and COO, Tom Stout, because they speak the same language. It's not exactly my language. They're both passionate about it. And we, ARK, need to learn this because we would like to do more in the crypto world. As it turns out, we felt that they had built such a strong platform. And interestingly, 21 Shares is the largest pure play crypto ETP provider in the world with roughly $2 billion in assets today. But they built that platform way back then. And, it's very robust. And combining that with our research and our client service, which our Resolute has been with us every step of the way. Very few firms in our industry have a client service, either department or partner, who has come along with them in the crypto world, Bitcoin in particular. Our distribution partner has had to learn Bitcoin. And so we felt that, that those three legs of this platform, infrastructure, research, and client service, were going to make for a winning combination. And that's how we got together and why we got together. I often have to say, after I've said the plumbing is very complicated, I usually have Ophelia with me to explain why is it complicated? What are some of the complications? So that people really do understand doing this for 5 years and launching 40 funds through thick and thin, up markets, down markets, crisis markets. You've held up, weathered the storm, and battle tested the infrastructure. Whereas a BlackRock and Invesco and all of the big traditional firms have not had that experience.
While the oppressive regulatory environment is the main reason institutional investors cannot invest in crypto in the United States, the lack of infrastructure is another. During the interview, Ophelia shares the importance of infrastructure in getting wealthy institutional investors aboard, using a personal story about teaching someone to use MetaMask. Despite years of hard work, it is clear that the cryptocurrency industry still needs more work done on the front of simple infrastructure that will attract people of all ages and backgrounds. Ophelia explains that this is exactly what crypto-related ETFs will do, helping to bridge the very wide gap between crypto and wealthy traditional institutional investors. She adds that such infrastructure will help repackage crypto so it can work within the existing financial infrastructure and incentivize big asset managers and pension funds to allocate. Cathie also discusses institutional allocation after the approval and how huge she believes it'll get. Here are more clips from the interview.
I think there's been an anticipatory move that there is an appetite. So that's one reason the price has been quite firm here. And so I will say when a spot Bitcoin ETF is approved, because I think the probability is, well, we think it's 95% now, if not higher. I know that the cash versus in-kind, create and redeem, is an issue here, but and we can talk about that later. But I think a couple of things happened, especially something 5 years ago in 2018. Cambridge Associates, which is a consultant to institutions, endowments, foundations, and so forth, wrote a paper about Bitcoin and said to the institutional world, okay, you may agree with all of these leaders who are calling it a Ponzi scheme or an environmental scourge on the system, but recognize that the correlation of risk and return between Bitcoin and all of these other assets is very low. So what we probably have here is a new asset class. And what institutions do know is that the best way to increase returns per unit of risk is to diversify into a new asset class. So this is very important. And so Cambridge back then said, you may not like it, and you may really believe all these people who are saying these horrible things about it, but this is the way it's behaving. And our study, and we've put this study out, we're updating it now, on what should be the institutional allocation in a broad-based portfolio to Bitcoin. If you want to, this is as of last year, we're about to publish new numbers, but as of last year, if you wanted to minimize volatility, the optimal weight of Bitcoin in your overall portfolio would be 2%. If you want to maximize your Sharpe ratio, so your return per unit of risk, then the number is closer to 6%. And this kind of makes sense because I remember other new asset classes, real estate very early in my career. So 70s and 80s, real estate was the new asset class. And institutions started with a 1% allocation and then gradually moved up to that 5-ish%, maybe above. And then emerging markets, when that became a category, because it wasn't one emerging market at a time, but it was a category, a new category. Again, started with 1 and moved up to 5%. That, we believe, is what is going to happen here. And I think the fact that we and others are educating institutions that, wait a minute, this is mathematically metered to go up to 21 million units, and we're at roughly 19.5 million. The scarcity value is already showing itself. And with institutions starting to push in, that will be ever more true. So might we get a sell on the news? Well, sure, we've had a nice little burst here, and there's just hedge funds trade on anything, on any news. So you could have a bit of a sell-off, but we think that the institutional demand is going to take this new asset class much higher in terms of market value.
During the interview, Cathie and Ophelia warned that the money might begin coming in a trickle, but even that trickle will be massive for the cryptocurrency industry. Ophelia explains that even if we only get a few basis points of allocation to begin with, it will be extremely massive for the cryptocurrency industry, which has never seen that kind of massive and instant liquidity injection. She said, "The issue is that the numbers are way bigger than crypto has ever seen before. Crypto has no idea what money looks like when you're playing with an extra 3 zeros, and I think that's the piece that's just impossible for the industry to conceive of today." What are your thoughts on Cathie's interview and outlook for the cryptocurrency industry in 2024? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.